Good afternoon, everyone, and welcome to today's webinar, What the COVID-19 Stimulus Package CARES Act Means to You. I would now like to introduce Carole Foos from the OJM Group and a certified public accountant offering tax analysis and tax planning services to the firm's clients. Thank you, Carole, and welcome.
Thanks so much to everyone for joining us today. We're going to speak today about the CARES Act that just passed on Friday. I'm going to go through what I feel are some of the more important pieces of that act that will apply to you personally and to your businesses. You know, it's a hundreds of pages long bill. It's relatively complicated. The government we're still waiting for some of the guidance to come out that will explain some pieces of it that seem to be a little gray. So I do want to let everyone know, I'm going to walk you through, as I said, some of the more pertinent items. We will have some time for questions, but I also want to caution each and every one of you that it's going to be important to speak individually to your personal CPA, your attorney, your banker in terms of how you can utilize this bill best for your business and what some of the specifics are as they relate to you. So in addition to, the webinar today, I do also want to let you know that we've got some offers for some materials for you guys. That will be free. I'm going to tell you how to get those at the end of the webinar. And we hope that those will be helpful in, planning for your business, not only during this current downturn, but also just, into the future. So I want to talk about that. And then let's go to the agenda in terms of what we're going to talk about today. Again, this is legislation that just passed at the end of the day on Friday, the 27th. It's going to be important to talk to your personal advisors about it if you haven't already. Hopefully many of you have, but I'm sure you'll probably have follow-up questions for them after this. First thing I'm going to go through with you will be the new extended due dates for filing and payment of tax returns. So we'll walk through that. We'll spend a decent amount of time on the new payment protection program, forgivable loans, as I think for many of you, there's probably some high interest in those, and there's a lot of details in those. I want you to learn, at least generally how those might benefit you. And then we'll talk briefly about some of the additional provisions, such as the FICA employer tax credits, the emergency disaster loans, the EIDL loans, which are another piece of the legislation, individual rebates, and some of the retirement plan provisions. Okay, so let's start with the filing and payment deadline. In general, what's happened is there is an interest and penalty-free extension to pay and to file your taxes from April 15th, 2020 until July 15th, 2020. So a 3-month extension, it's automatic. There is no need to file any type of extension form to get this. You don't need to file a Form 4868 for your individual tax return, nor do you need to file the Form 7004 for your corporate tax return. This extension applies to 2019 tax due on April 15th, 2020, as well as to the first quarter 2020 estimated tax payments, which would also be due on April 15th. It applies to all individual filers, including trusts, as well as to corporations. So at the last week when they were talking about this law, when they were doing some of the negotiations, they had originally said there might be some limits for individuals of up to $1 million in tax due and for corporations of up to $10 million in tax due. They scrapped that and they said, we're going to allow everyone who's got tax returns due on April 15th to have both the filing and the payment extended until July 15th. Now, it's going to be important to note that your second quarter 2020 estimated payments, which generally are due on June 15th, as of right now, those will still be due June 15th. So essentially, you will potentially pay your second quarter 2020 estimate a month earlier than you pay your first quarter 2020 estimate. Also, 2019 IRA contributions, the deadline for making those contributions has also been extended from April 15th until July 15th, 2020. So you won't need to make those IRA contributions until July 15th. As many of you might already know, other pension contributions that you make through your business entities, those are typically not due until the extended due date of your federal income tax return. So if you had corporate income tax returns, if you're an S corporation or a partnership and you had corporate income tax returns that were due on March 15th and you extended those till September 15th, you will have until September 15th to make those defined contribution, defined benefit payments, profit sharing contributions for your company's retirement plan. Another piece of the legislation that's really been written about a lot, talked about a lot, many of you may have already done some webinars on this and read a lot of articles on it over the past 4 days, the Payment Protection Program for Givable Loans. This is an important piece of the legislation meant to help small businesses, which they define as businesses with less than 500 employees, continue to pay their employees, keep people on the payroll, and get some help from the government in doing that. So this part of the stimulus package, I'm going to go through some of the definitions first. The covered dates in this part of the legislation are February 15th, 2020 until June 30th, 2020. Eligibility, so who's eligible for these Payment Protection Program for Givable Loans? Any business concern, nonprofit, or veterans organization with not more than 500 employees generally. Self-employed individuals and independent contractors are also eligible. And they've granted a special eligibility for restaurants with not more than 500 employees per location. These eligible businesses can apply for a Small Business Administration, an SBA loan, through an SBA affiliated bank. So for these Payment Protection Program loans, current understanding, and I've spoken to some bankers about it, is there's an application that actually just came out on the SBA's website last night. You'll fill out that application and you'll provide it to a bank that is an SBA affiliated bank, which most of the larger banks are. If you bank with a smaller local bank, you should be asking them the question whether they're affiliated with SBA or eligible to do this program with you. You'll provide all of the documentation and the application to your bank, and you'll deal with the bank on getting the loan. The maximum amount of the loan is the lesser of your average monthly payroll over the past year, the year 12 months before the date of the loan, times 2.5. So think about that. It's 2.5 months of your average monthly payroll when looking back at your payroll over the last year, or $10 million, whichever is less. Now, there are some special rules if your business has seasonal employees, if you're a new business that maybe hasn't been in business for that full year, and also some rules for businesses with outstanding loans, meaning current loans from the SBA. The payroll costs that we're talking about, so we just said the maximum amount of the loan is 2.5 times your average monthly payroll. Payroll costs will not include compensation of any individual employee in excess of an annual salary of $100,000. So if I'm thinking about 2.5 months of my average monthly payroll, When I'm looking at average monthly payroll, if I've got someone who makes $150,000, I can only look at the first $100,000 for that employee. So essentially $8,333 a month for any one employee is going to be the most you can look at. Payroll costs don't include qualified sick or family leave wages if you're taking a payroll tax credit under one of the other acts, the Families First Coronavirus Response Act, which passed recently as well. So they're not going to let you double dip, take a payroll tax credit on sick leave or family leave that you're paying, and also get a loan under the Payment Protection Program for those same payments. The allowable use of the loans, this is important. So I just said, maximum amount of the loan, you're looking at just your average payroll costs times 2.5 months. Use of the loans, you can use the proceeds from the loan for those same payroll costs, for group health benefits, for employee salary, wages, commissions, also for mortgage interest, rent, utilities, and as interest on any debt obligations that were incurred before the covered period. So if you had debt that was incurred prior to February 15th, 2020, on which you're paying interest, you can use that interest as part of the use of the loan. These loans are non-recourse. They do not require a personal guarantee. They don't require collateral. They have a maximum maturity of 10 years and a maximum interest rate of 4%. They are also calling for 6 to 12 months of deferment on payments of both principal and interest on these loans. So you'll take the loan. The loan will be for a maximum of 10 years at a maximum of 4%, and you're not going to have to make payments on it for somewhere in the next 6 to 12 months. If you take one of these payment protection loans out, you do have to make a good faith certification that the loan is necessary to support your continuing operations given the current uncertainty surrounding the coronavirus and current business and economic environment. You also have to certify that the funds will be used to retain workers, to maintain payroll, to pay rent, mortgage, and utilities. I did also see last night on the application that came up on the SBA's website, I believe in addition you have to certify that no more than 25% of the loan will be used for costs other than payroll. So again, not a lot of clarification on this yet, but it would seem that they want you to use at least 75% of the loan proceeds to cover your payroll costs. The other up to 25% can be used for those mortgage interest, rent, utilities costs. So what they have also said, loan forgiveness, you can have the principal only forgiven. So that 4% interest rate, you're still going to pay interest. That's not going to be forgiven, but the principal can be forgiven in an amount equal to costs that are incurred over the 8 weeks following the origination of the loan. So let's just say I apply for a loan and it closes 3 weeks from now, or it closes, let's just say April 30th. I'm going to look at the 8 weeks following that April 30th date. So essentially May and June. I'm going to look at my payroll costs. Payroll for that purpose is defined in the same way it was defined in determining what's the maximum amount of the loan. I'm going to look at my mortgage interest that I pay over those 8 weeks, any rent that I pay, and utilities. When I come up with that amount, that's the amount of principal on the loan that can be forgiven. Okay, so that's best case scenario that can be forgiven. I do want to dive in a little bit to what are they talking about in terms of payroll costs. And I will tell you, there's a little bit of confusion on this amongst, I've watched many webinars on it and read a lot of articles on it, read the text of the bill to a certain extent over the weekend. And there are some questions on, is this what they really meant? Are they going to clarify this in the guidance? The way that it is written and being read by most people right now, payroll includes gross wages for your employees, less employee FICA tax, less employee Medicare tax, less their federal withholding. Not really sure why they're having you back out federal withholding, but that's at least the way the law appears to be written at this time. Payroll costs will also include group healthcare benefits. So healthcare benefits the company pays on behalf of employees and owners seem to be includable in those payroll costs. Okay, so I'm looking at those numbers for the past year to come up with my average monthly payroll. And then once I get the loan, I'm going to look at those same numbers that I pay out over the 8 weeks following loan origination date to see what can be forgiven. There will be a reduction in the loan forgiveness amount if you have reduced your full-time equivalent employee headcount. So let's just say you're a practice that maybe has been, either completely shut down or severely reduced because of the coronavirus. If you have, for the covered period, if your average full-time employees, let's say, is 10 people, you're going to take that 10 and divide it by either your average full-time employees per month in that same period in 2019, so from February 15th to June 30th, 2019. Let's just say last year you still had those 10 employees. In that case, you're eligible for 100% loan forgiveness. If you have 10 employees during the covered period in 2020, but you had 12 in the covered period during 19, then 10/12 of your loan would be eligible for forgiveness. You can also instead, and this is at your choosing, instead of looking at how many average employees you had February 15th of 19 through June 30th of 19, you can look at how many you had January 1st, 2020 through the end of February 2020. So for instance, maybe you had 10 employees for most of 19 and somebody left, you didn't replace them. So starting in 2020, you only had 9 employees. If you still have those same 9 employees from February 15th through June 30th, and you had 9 at the beginning of the first 2 months of 2020, you're still eligible for 100% loan forgiveness. So that's important to note. If you have had to lay off people, you do have the ability to rehire people within 30 days of the enactment of the law. So again, not definite clarification, but it would seem that the law was enacted on March 27th. So if you rehire employees prior to April 26th, then you could still count them into your average count for this covered period, and potentially still have full forgiveness on the loan. They're also going to reduce your forgiveness if you maybe kept all of your employees, but if you reduce their salary by greater than 25% during the covered period. So if you said, hey, I'm not going to lay anybody off, I'm going to keep all 10 of my employees, but I do need everybody to take a 25% pay cut, that could be a problem. So that's another thing. Employees who are paid over $100,000 per year are excluded from that 25% reduction issue. I want to just take a little bit of a break here on that payroll protection program loan, because in my mind, that's probably what a lot of you are potentially the most interested in as part of the stimulus package. And I just want to say, some of the things that we're hearing out there that are important to note. One, if you haven't already spoken to your bank about the possibility of doing this, I would tell you it's going to be important to reach out to your banker sooner rather than later. Different banks I have seen have kind of different lists of what documentation they're going to be looking for. In general, they seem to be looking for your quarterly Form 941s for payroll from 2019. They're looking for any 1099s that you issued in 2019. They're looking at a payroll report that shows by employee, you know, gross wages, withholding, vacation pay, sick leave pay, retirement benefits. They're looking for your healthcare invoices so that you can prove what you pay in healthcare costs for your employees. I think top of mind for any of you who are thinking about this would be to start gathering that information, reach out to your CPA to get help in coming up with those calculations of what's the maximum amount of the loan and what do I think is going to be forgivable going forward. And like I said, reach out to your banker as well and determine where you can go to get this loan if you think this is something you want to do. Some of the additional miscellaneous provisions that are in the bill, there are some FICA tax credits. So, you know, FICA tax is Social Security tax. That is on, if you're not familiar, employees pay half of that. So employees pay FICA tax at 6.2%. The employer covers 6.2% FICA tax on up to, you know, $137-ish thousand of wages for an employee in a year. So one of the things they've done is say that you can get a credit on the employer portion of the FICA tax. And there are a few different ways that they're offering these credits. One, you know, part of the one of the coronavirus packages that passed was a requirement that companies with under 500 employees are required to pay sick leave. If you've got someone out sick because of the coronavirus, you got to pay 10 days of sick leave. So they are offering a FICA tax credit on that sick leave pay, which is the lesser of the wages plus healthcare costs that you're paying for that employee for 10 days, or $511 per day for 10 days per employee. So that's a credit that you can get off your, again, employer portion of the FICA payroll tax. Similarly, if you've got someone out on family leave because they've been impacted by the coronavirus, you can take an employer FICA tax credit for that. That amount is $200 per day up to a maximum of $10,000. Now, they've also offered an employee retention credit. So for businesses that were forced to close or suspend operations due to the coronavirus, and you continue to pay your employees, they're offering a FICA tax credit. It is important to note that you can't take both that employer retention tax credit and get the payroll protection loan, you know, for the same dollars that you're paying out. So again, a lot of things in this bill, a lot of moving parts. Certainly talk to your CPAs about it. Think about it, especially if you use a payroll service and you are going to want to take this employer FICA tax credit. I think it's also likely going to be important to talk to your payroll service about who's going to hold that money. You know, do you want your payroll service holding that? Not necessarily. So how are you going to deal with that in them pulling out your payroll and your taxes from your account each payroll period? The EIDL loans, or economic injury disaster loans, are another loan that came to be through the CARES Act. These are loans essentially that are, it's an emergency loan if your business has been impacted by the coronavirus and you need funds to essentially to pay your bills. Now, these EIDL loans can be used to cover payroll, to cover, you know, vendor costs, accounts payable that you have with suppliers, all sorts of different things. Actually, they can cover more items than the payroll protection loans can cover because, right, the proceeds for the payroll protection loan are meant to cover payroll, mortgage interest, rent, and utilities. These could actually cover, you know, supplies, vendor payments, various things. A key component of these EIDL loans is that you are eligible for an emergency advance of up to $10,000 that they have said should be made available to you within 3 days of making an application for an EIDL loan. The EIDL loans have a lower interest rate, maximum interest rate, than the payroll protection loans. The maximum interest rate on the EIDL loans is 3.75% for a for-profit business. I believe it's 2.75% for a not-for-profit business. And the term of these loans is 30 years versus a 10-year maximum term for the payroll protection loan. So that being said, while on the surface you might say, oh, the EIDL loans sounds better, keep in mind the EIDL loans are not forgivable. Also note, if you apply for the EIDL loan and you get that $10,000 advance, $10,000 advance is going to reduce what is forgivable under a payroll protection loan if you get a payroll protection loan. So the two types of loans aren't mutually exclusive, but depending on what you're using the EIDL loan for, that may roll up into a payroll protection loan if you get one of those, and you will lose the $10,000 of forgiveness if you get one of the advances. Individual tax rebates, I do want to touch on. Again, this was part of the package where they have said an individual single taxpayer whose AGI, adjusted gross income, is less than $75,000 will get a rebate check in the amount of $1,200. Married filing joint taxpayers will get a $2,400 rebate check if their adjusted gross income is less than $150,000. In addition, those rebates will, you'll get $500 per qualifying child. So there's a phase out if your adjusted gross income is above $75,000 single or above $150,000 for joint filers. It maxes out at about $98,000 for single taxpayers and just under $200,000 for joint taxpayers. You're not getting any rebate check. But I think what this is important to note is certainly for many of you, for your employees, hopefully they'll be getting some of these rebate checks, and that should help them out as well. The rebate checks are going to be based on your adjusted gross income for your 2019 tax return if it has already been filed. If it hasn't been filed, it will be based on your 2018 tax return. Additionally, if a taxpayer put their bank account information into their tax return when filing for either a direct deposit or a withdrawal for a payment due, then the rebate check should be direct deposited into that bank account that Treasury Department already has. If they don't have that information, they'll mail out checks. There are also a couple of key retirement plan provisions in this act that I think are important. For any of you over age 70 and a half who have a required minimum distribution from a retirement plan, if you have not taken that yet for 2020, you do not have to take it. Not required. You can skip that and not have that extra income if you don't need it. Additionally, for taxpayers who have been affected by the coronavirus, and I think this generally means taxpayers who tested positive or taxpayers whose spouse tested positive, might mean a family member, you had to care for a family member, but you are able to take a retirement plan distribution of up to $100,000. And if you're under age 59 and a half, there will not be a penalty tax. So no 10% penalty tax on that distribution. It will be subject to income tax, but that income tax will be due ratably over the next 3 years. And in addition, that $100,000 distribution can be repaid into your retirement plan over the next 3 years. So And you can do that even if you're already maximally funding your retirement plan. So let's just say you've got a 401k plan, you have been adversely affected because you're, by the coronavirus, and you want to take money out of that retirement plan to help fund your living expenses. You're under 59 and a half. You can take the $100,000 out. You're not going to be hit with a $10,000 penalty tax on that. If you're continuing to work and you're putting, let's say, $56,000 a year into your 401k plan between salary deferrals and profit sharing contributions, you can, over the next 3 years, continue to put that $56,000 in, and in addition, repay the money you just took out, so that $33,000 a year to make up the $100,000 that you took out. So that's going to be important to note also if there are people that are specifically affected by the coronavirus. Again, just a reminder, talk to your CPA, your attorney, your banker. We really just wanted today to give you an overview, hopefully of information that you may have already seen in other places, but we think that, hopefully it gives you a better understanding of what's available to you and your practices through this stimulus bill. Before we take questions, I do also want to, offer this. I mentioned at the beginning of the webinar, I know many of you are not able to practice full-time right now. We do have some free books from OJM that we're offering to webinar attendees. You can text ASDS 20, as you see on your screen, to this number, 555-888. And then you'll get a reply text and you can click the link. You can choose the title and book format that you want. So if you want a hard copy or an ebook, you can choose that. Give us your name and contact information and hit submit. You can also visit our OJM bookstore at ojmbookstore.com and enter that same code, ASDS20, at checkout. So I wanted to let you know that. And I think we might have some questions.
Thank you, Carole. Yes, we do have some questions that have been submitted. Our first question is the extension of the deadline to July 15th just federal or state taxes as well?
That's a great question. So many states have also extended their deadlines. You do need to check with your individual state to confirm. I don't know about if every state has done it yet, but there have been a lot of states that have also extended their deadlines.
All right, this is kind of a two-part question. What dates are we supposed to use for the payroll? They've been told several different things. Someone said use payroll for 2019. Another person told them February of 2019 through March of 2020.
So the text of, and this is going to be something that, the banks, and I didn't really mention this at the beginning, but I just talked to another bank this morning that said they're thinking they're not going to be ready to take these applications until at least Friday and probably more likely Monday or Tuesday. Those are some of the things that banks are currently looking for guidance on from the feds. What I believe the text of the bill says is you look at 1 year, your payroll 1 year prior to the time you apply. So if I applied today on April 1st, I would look at my payroll from April 1st, 2019 through March 31st, 2020. That's my understanding. But again, I think the banks are waiting on some additional guidance for that.
Does payroll cost computation include payroll taxes?
It does not. So you're backing out not only your employer payroll taxes, but also you're backing out the FICA and Medicare. And again, this is what the law says right now, federal withholding for your employees. So it does not include those. It does include group health benefits.
Okay. I believe the terms of loan may have changed to a 2-year term and 50 basis point annual interest rate. Have you heard that?
I sure have not.
Okay. What if an employee quits?
Unfortunately, there's no provision for that. So assuming an employee quits and you don't replace them during the covered period, you're probably not going to have 100% forgiveness. Now, that being said, if you really think about it, even if you don't have 100% forgiveness, you're talking about a 4% interest rate on presumably, not a big amount. If you don't have a ton that's not forgiven, that's still a decent loan rate in this environment. I mean, I know some of you might have lines of credit that are at a better rate than that, but you're probably still not so bad off. And if you've had an employee that's already quit, you might be able to, you can kind of potentially work that into your calculation.
If we had to furlough staff and they're getting unemployment, how does that affect our ability to get loan forgiveness? Would people have to repay their unemployment if we can pay them retroactively?
So I don't think you have to pay them retroactively. And again, I'm not going to tell you I know that with 100% certainty. The text of the law gives you the ability to rehire an employee within 30 days of enactment. So if you had already laid them off and they've been collecting unemployment, but you rehire them in the next, 24, 25 days, however long it's been since enactment, then I think you're okay and you don't need to repay their unemployment. You don't need to retro pay them. You're going to be, my understanding is you will be considered to have kept those employees during the whole covered period.
Okay. And is the EIDL loan $10,000 maximum per physician or per clinic?
So it's the $10,000 is not the maximum on that loan. The $10,000 is the maximum emergency advance that you can get within that 3-day period. I believe the maximum on the EIDL loan, and I just looked at this earlier, and I think it's $2 million, but I'm not absolutely sure on that. Okay. But you can, in applying for the loan, you can also request an emergency advance, and the $10,000 is the emergency advance.
Can you use money from payroll protection plan to pay back the practice for payroll that was spent before you get a loan, or is it just the 8 weeks from the date of the loan?
Just going to be the 8 weeks from the date of the loan.
So when figuring out payroll for this application, we back out FICA, MedTax, and Fed withholding.
That is my understanding as it is written right now. It'll be interesting to see if they change at least that federal withholding, but the way it's written right now, yes, that seems to be everyone's understanding.
Okay. Can you speak to the independent contractor, not business owner, who has no employees? What resources are available to them? Unemployment, tax breaks?
So a couple of things on that. Part of this bill does apply to independent contractors. They also expanded unemployment to include independent contractors. So that is certainly an option. In addition, independent contractors, I believe, can either, a couple of things, and this is one of the gray areas that everybody seems to be waiting on information on, whether independent contractors can apply themselves for this loan, which as a self-employed individual, I would think, yes, you can. Or, if you particularly work, for instance, for one practice, can they include your costs in their loan application and then they continue to pay you? But you're definitely covered under the loan. I think, again, I just talked to a banker last night and they are also not sure. They're kind of waiting on guidance for that. But I would definitely, if you're an independent contractor who gets all your income through a 1099, certainly reach out to your banker and see what they're hearing on that and kind of get on the list of, hey, the other thing is if you're getting most of your income, for instance, from one practice, I would reach out to them as well. If you're not, and you're an independent contractor, you know, getting money from insurance reimbursements, et cetera, then yes, I think you're going to want to apply for the loan yourself.
Can you explain the 50% salary retention credit? Something about keeping 50% of employees now, but 80% later?
You know what? I don't have the details of that up right now, but if you guys send that in, I probably have some documentation on it that I can send you afterwards.
I will send that question from that individual and their information so you can follow up.
Okay, that's great.
How will these loans affect new businesses and sole proprietorships? I didn't say that right.
Sole proprietorships. So sole proprietorships, it'll be similar to what I just said about the independent contractors. You know, my understanding is, and again, I've read a few articles on this. I don't think anyone's sure what they're going to count as your quote unquote compensation, whether that's your net income on your Schedule C. I mean, that's what you pay employment taxes on. So that's the general thought. But you know, sole proprietor would also be able to apply. If you're a sole proprietor who also has employees, you can apply to cover your payroll costs the payroll costs for your employees as well as for you, the owner. And what was the other part of that? Not only how it applied to sole proprietors, but
new businesses.
New businesses. So again, my guess is, and I don't know this for certain, but I think what they're saying for new businesses will be, for instance, you can't figure your average payroll over the last 12 months because maybe you haven't been in business for the last 12 months. If you've been in business for 4 months, they're probably going to want your average payroll over those 4 months, and you take 2.5 times that. So again, that's what I believe it will be. I am not 100% certain on that.
Can I use the EDIL loan to help pay on a construction loan for a new clinic building I'm currently working on?
I believe the EIDL loans, you know, are more broad-based, and you can use those for just about any expense you have in your business. Now, that being said, the EIDL loans are also different. You're not applying for those loans through an affiliated bank. You're actually applying through the SBA and utilizing their website to apply for those. So there might be some more information on there that, you know, I don't recall that I saw anything that specifically prohibits something like that, but I don't know that for certain.
If our employees who fall into the category of greater than 100,000 have taken leave of absence voluntarily, will we be penalized for this in loan forgiveness?
I believe that I have not seen anything in the guidance that says you can totally exclude your employees who make over 100,000 in the full-time equivalent head count. So my guess is you cannot, but I can look in. I did not look specifically into that, so I can look into that a little further too.
Okay. Can you explain the 100K limit again? I.e., if you make $250,000 in a year, but during the 2.5 months you're making $52,000, can you reimburse yourself for the $52,000?
No, the most you're going to be able to reimburse, let me rephrase that. You can reimburse yourself, but the most that's going to be forgivable per any one employee, including you as the owner, is $8,333.33 per month.
Is there
and that's going to be the most, right, in determining the amount of the loan as well. You can only limit your compensation to $8,333 per month.
Is there a prepayment penalty for repaying the interest?
I don't believe there are any prepayment penalties. I have not seen anything about that. So I think that, you know, once once this is, whatever, once we're through this, I think you can probably pay it back at any given time. I don't think they're going to make you keep the money out for 10 years or keep paying the interest. And keep in mind, if the whole loan is forgiven, at the time of forgiveness, the meter on the interest is going to stop because there's no principal left on the loan.
What if I had one full-time employee who was replaced with 2 part-time people? Would this be considered a reduction of a full-time employee?
It's full-time equivalent, so my guess is no. I don't know that for certain.
Okay.
And honestly, well, yeah, go ahead. I don't know that for certain.
When doing the loan amount, can we include the rent, interest, utilities, and healthcare and 401k match in calculating the amount we need?
No, you can include the payroll costs are what you're looking at for the amount needed. So that's going to be, your payroll, your group health is included in payroll. I think retirement benefits are also included as part of your payroll costs, but not your mortgage interest, not your rent, not your utilities. So if you think about it from this standpoint, when you're calculating the maximum amount of the loan, they're giving you 2.5 times your average monthly payroll. When they're looking at the forgiveness, they're only forgiving what you paid for 8 weeks or 2 months. So they're kind of giving you that other half-month cushion of average payroll to cover some of those other costs like your mortgage interest, your rent, your utilities.
What happens if your employees are retained but are on partial unemployment benefits?
Are they retained? I mean, I think that depends if they're retained at the same rate or at the same, at the same payroll that you were paying before and in the same numbers. So if you're retaining them, I'm not sure how they're going to be on partial unemployment benefits. So I'm not sure I can answer that question.
What if you terminate an employee because of a problem predating COVID? Can you still get loan forgiveness if the termination has nothing to do with coronavirus and its effects on your practice?
No, because their thought would be, if that's the case, you should be rehiring someone, I think. So no, it's all based on employee count. They're not asking for explanations of why your employee count went down, I don't believe. Now, I'm not saying there couldn't be guidance that comes out later, but as what's been written right now, it's sort of a pretty strict mathematical computation of full-time equivalent number of employees.
You had mentioned that the funds can be used for interest paid before the loan period. How many months of interest would be forgivable on these interest expenses?
So that's also going to be what you pay in the 8 weeks following the date of the loan. All the costs you're looking at, all the costs that are forgivable, you're looking at what gets paid the 8 weeks following the loan origination date.
Regarding the loan for independent contractor, isn't the loan to pay bills related to work rent? Is it applicable to pay for personal bills since I have no income coming in?
No, it is not going to be applicable to pay your personal bills. That's what if you're paying yourself payroll, it's applicable to continue to pay you a payroll so that you can pay your personal bills.
Do we have to hire everyone back now, or can we wait until the loan starts?
Again, the text of the law says within 30 days of enactment. So I do not know, how long it's going to take for them. I have no idea how long it's going to take. We're already looking at potentially close to 10 days out from enactment that it's going to take before the banks are even ready to start accepting these applications, a week to 10 days. So I don't know that. My advice to you would be, once the banks are ready to accept the applications, I think that's a question that you can have, because I'm sure they're getting a lot of guidance, or you can ask your CPA at this time later this week. I guess if I were you, if you can afford it, I would err on the side of caution and get them rehired within 30 days of enactment. That being said, again, if the full loan is not forgiven, it's still not a terrible deal to take the loan, pay a 4% interest rate and pay, on a portion of it that's not ultimately forgiven because maybe you didn't have your full-time employees hired back, within the 30 days, but it's just my opinion.
Can you repeat the information about the $10,000 advance and it will not be forgiven for the first $10,000 of PPP?
So if you apply for an EIDL loan, one of the things that you can ask for is a $10,000, I'll call it emergency advance that they are saying should be paid out to you within 3 days or available to you within 3 days of application. If you get that $10,000 advance and you apply for a PPP loan and get that loan, let's just say you applied for a PPP loan and you applied for $200,000 through the PPP loan. You got the $200,000. You have payroll costs, mortgage interest, rent, et cetera, of $200,000 over those next 8 weeks. So presumably you have enough costs to have that whole PPP loan forgiven. My understanding from everything I've read is that you would only have $190,000 of the PPP loan forgiven because of that $10,000 advance.
If you work for a private equity company and they have decreased your salary to less than 25% of your previous pay, can you apply for this loan?
If not, if you're an employee, no. If you're a W-2 employee of that private equity company, there's no ability for an employee to apply for this. This is all businesses, self-employed people. So if you're a W-2 employee, then no, I don't believe there's any ability for you to apply.
What criteria will be used to determine if the loan is necessary?
It's basically your good faith certification that it's necessary. So, if you look at the application, which is currently on the SBA website as of last night, you're certifying that you need this loan to continue operations. Now, that could be, you don't have to prove that I don't have enough money in my bank account right now to cover 2 months of payroll. I would think, again, this is opinion, I don't know for sure, something to talk to your banker about, but because there's so much uncertainty around this right now and how long it's going to last, I'm assuming many of you whose practices have been adversely affected by it, you don't know when you're going to be able to go back to full practice and back to full revenue. Is that going to be in 2 weeks? Is that going to be at the beginning of May? Is that going to be mid-May? So, my thought would be, to some extent, that might be enough, to be able to certify that there's enough uncertainty about my ability to continue to pay payroll that I need this help for the next 2 months, because even if I've got money, I might need that money to pay for the 3rd month when my practice still isn't fully functional.
If one of my employees, greater than $100,000 employees, is only part-time, do I have to include her in my calculation? I would think so. Yeah, I would think you want to include that person. I haven't seen any text that says over 100,000 and that's prorated for somebody who is part-time. So, I think even if somebody only works 20 hours a week and is making 100,000, I would think you can still include up to 100,000 annually for them, but I don't know that for sure. I've not seen anything on that or read anything on that. Have you heard of reimbursement for lost elective surgery revenue?
I have not.
You just said the employees need to be reemployed within 30 days of enactment. Is that the enactment of the bill or the enactment of our loan? Our business is forced to be closed right now, but we could really use the help when the government allows us to open again. How could business rehire when we are forced to stay closed?
I understand my reading of it, and my understanding is that it's 30 days of enactment of the bill. And I only say that because there are other places in the bill that talk about loan origination date. So I think if they meant rehiring within 30 days of the loan origination date, they would have written it in that manner. So that's just my understanding. I don't know that for certain. And I totally understand, yes, that's kind of a leap of faith, right? If the money's not available within 30 days, or maybe you still haven't gotten it, that's a hard call to be rehiring people, certainly.
On the SBA application, is the number of jobs the number of FTE or the number of employees, part-time and full-time?
I do not know that for sure. Again, I have not read that SBA app just came out last night. I saw the app. I have not read all the instructions to it. That may be in the instructions that are included with it, but I don't know the answer to that. And again, I would encourage all of you to work with your accountants to fill out that application and to come up with the calculations of what's available.
We have 28 full-time employees and haven't terminated anyone. Some are working from home but aren't getting their normal 40 hours per week. We're trying to get them some portion of that, ideally 30 or more, but they are currently using their PTL and then sick leave as they see fit to make up their hours. Obviously, this will be exhausted at some point. Can they use partial unemployment and have us use the payroll loan, or do we just have to pay them for all hours, even if they aren't able to work, to qualify for loan forgiveness?
I think what you're going to want to look at in terms of loan forgiveness is that, number one, the employee count, number two, that what you're paying them, so not necessarily what they're making through unemployment and what you're paying them, but that what you're paying them does not decrease by more than 25%. That would be my thought. So if you think about it, right, if you had somebody working 40 hours, you're paying them hourly, they at least need to continue to work 30 hours that you're paying them for in order to keep their wages, at a reduction of less than 25%.
That appears to be the end of the, one just popped up. How do you count an employee who does IT for the practice but works irregularly depending on how much we need them for computer issues?
I have not really looked at how they're calculating full-time equivalent employees. Again, that might be in the instructions to the app that's on the SBA website. Other than that, I would definitely, say when you're speaking to your banker about this and going through the process, I would ask them. I think that's who is going to get a lot of the guidance from the SBA or from the Treasury Department on these.
We're applying for the PPP loan and need to know if we can only use the RHE payroll calculation, or can we add rent and utilities, etc.?
You cannot add rent and utilities in when you are looking at what's the maximum amount of the loan. That's not part of the calculation. Calculation for maximum amount of the loan is just payroll costs.
What about employees that are hourly and get commission? Do you take an average of their pay over the previous 12 months?
That is my understanding. So yes, and that's an issue for commission-based employees, because obviously, I get commissions are up and down and you don't know what they're going to be from 1 month to the next. But my understanding is you're looking at the average over the 12-month period, the past 12-month period, in determining the loan amount.
Okay. What if you decreased hours for employees the last couple of weeks? If we can bring them to full-time hours, by what date can we get full forgiveness?
Again, I believe within 30 days of enactment. So by my count, it was enacted March 27th. I would think 30 days is April the 26th. But I would say look for more on that as some more guidance comes out.
If you already applied for the EIDL, can you decline if the app is accepted? Also, can you decline the $10,000 emergency advance?
That I do not know.
I don't
think if you already applied for the 10,000 emergency advance, I mean, if you didn't apply for it, I don't know that that's going to be an option for you. If you did apply for it, I'm not sure if you can decline it or not.
May we use the EIDL loan money for software subscriptions for our electronic medical record?
I believe so. I believe EIDL money can be used, pretty broadly based on expenses of your business that you just need cash to cover.
What about employees who are on 1099 but work every week for us but are not on payroll?
So that's a question. We have not seen clear guidance on that. So that's what we don't know yet, whether you as the employer who's paying them 1099 income would include them in your count and then continue to pay their 1099 income, or whether they need to apply themselves. So everyone is still waiting on guidance on that issue as to how that's going to work.
Thank you, Carole Foos, and thank you everyone for attending today's webinar, What the COVID-19 Stimulus Package CARES Act Means to You. The OJM Group has graciously offered you the opportunity to receive a free copy of their new book, Wealth Planning for the Modern Physician. Information on how to obtain this is in the handout area of the webinar. If you have any other questions, please contact ASDS education staff at education@asds.net. On behalf of ASDS and our presenters, thank you for joining us today and have a great rest of your day.